Lock and load. Because it's Colombier Acquisition's upcoming $150 million merger with Grab-A-Gun, a fast-growing online firearms retailer. Another reason this is a big deal is because of Donald Trump Jr. joining as an advisor to Grab-A-Gun, as well as the appealing growth prospects of a fine-tuned firearms platform from Grab-A-Gun's e-commerce site, which utilizes proprietary inventory and order management systems, incorporating AI to streamline the customer journey and enable seamless logistics, presenting immense opportunity in a highly fragmented $25 billion market, not to mention increasing demand for online firearms retail. Pending shareholder approval, the business combination is expected to close after Colombier's landmark general meeting on July 15, 2025. After that, pay attention to DraftKings, as it will report earnings on August 7th, right after the market closes. Bullish sentiment hangs on like a slot machine player after 10 p.m. Since the U.S. gaming industry has seen record growth, with $72 billion in commercial gaming revenue in 2024, driven in part by online firms like DraftKings. However, some bullish bets on DKNG are getting the shakes due to a proposed $1.1 billion tax hike in the Senate GOP's tax bill. If it gains traction, it would limit loss deductions to 90% of winnings. Currently, bettors can deduct all losses up to the amount of their winnings. This change could significantly reduce gamblers' net winnings and even lead to income tax on break-even or losing bets. The provision is part of President Donald Trump's multi-trillion-dollar tax bill and is estimated to net the government $1.1 billion through 2034. In response, Representative Dina Titus, a Democrat from Las Vegas, is pushing for a fix, noting the impact will extend beyond professional poker players to amateur gamblers. Now, after that final round of online poker checkout, SBET, SharpLink Gaming's treasury strategy heavily invested in Ethereum, since the Ethereum Foundation sold 10,000 ETH to SharpLink Gaming in a $25.7 million over-the-counter deal, marking the first direct acquisition of ETH by a publicly listed company. SharpLink plans to stake and restake the tokens, removing them from circulation to support Ethereum's ecosystem. Joseph Lubin, SharpLink's chairman and Ethereum's co-founder, described the purchase as a commitment to Ethereum's long-term mission. SharpLink aims to leverage ETH's potential as a productive asset through staking rewards and decentralized finance protocols. This deal is part of SharpLink's broader strategy to accumulate ETH as its primary treasury reserve asset. SharpLink's total ETH holdings now stand at 253,000 ETH, with all tokens staked or restaked to generate yield. SharpLink's move reflects a growing trend of corporate adoption of cryptocurrencies, particularly Ethereum. The company's CEO sees this as a new chapter in digital asset integration with public markets. On the same side of the crypto coin, Bitmining is planning to build a significant treasury, except instead of ETH, it will be with Solana. This will be done by investing $200 to $300 million into SOL and converting its existing crypto holdings into SOL, essentially transforming Bitmining into a publicly traded proxy for SOL, opening up the potential to attract new investors. Other forces at work have to do with this being a low-float stock that has short interest, leading to some comparisons to previous high-flying crypto plays. On the other side of the proverbial Solana coin, concerns have also arisen regarding potential dilution, as well as some lacking confidence behind the feasibility for actual execution of the Solana investment plan. Whether these concerns remain founded remain to be seen. In the meantime, back in the real physical world, attraction is in the air. And surprise, surprise, it has to do with a Department of Defense partnership. Except this time, it isn't about AI, aerospace, or weapons. The DoD wants to bolster the U.S. rare earth magnet supply chain and reduce reliance on foreign sources. To do this, MP Materials has partnered with the U.S. Department of Defense in a multi-billion-dollar deal, which will involve MP Materials building a new magnet manufacturing facility in the U.S., expected to begin commissioning in 2028, boosting production to 10,000 metric tons annually. JP Morgan Chase and Goldman Sachs will provide $1 billion in financing for the facility. Then, the DoD will purchase 100% of magnets produced at the facility, with shared profits and a price floor commitment of $110 per kilogram for NdPr products. The DoD will acquire $400 million of MP Materials preferred stock, convertible into common shares, and a warrant for additional shares, positioning the DoD as MP Materials' largest shareholder. Now that's attractive. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.